Welcome to our July market update. Craig, talk to us a little bit about what's going on in the market. We've had some movement here.
Yes, we have. So let's talk about price appreciation. So between February and June, we've actually had 7.5% price appreciation with the median sales price in the Phoenix market. It is crazy. Yeah.
Why do you think that is?
Well, I think that basically that we have lack of inventory, right? There's no inventory on the market, very, very low, historically low. So that's driving the price up, obviously. And we have just a couple other facts I think are kind of interesting. Price reductions have declined significantly. Supply is actually 50% below normal and continues to drop every month.
Yeah, and I think demands, I think came in at 20% below normal.
Right.
When you have supply that's 50% below normal and demand that's only 20% below normal, you're going to see those listings start to decrease over time.
Right, absolutely. And not enough new products coming on the market to satisfy what's out there. So,
absolutely.
Yeah, and we're seeing it's a very interesting time. I mean, people that have kind of waiting to buy for the market crash, the upcoming market crash that you've been hearing about, that's not coming, right? I mean, we don't see any indications of a market crash happening. Markets always cycle. We're in one of those cycles. We have a higher interest rate environment right now. I do believe that a lot of buyers have actually reconciled the fact that rates are higher than they were a year and a half ago, and they're jumping in the market, you know?
I think the conversations that we're having are a lot easier. With the current interest rate environment, obviously there's a ton of media and talk out there about what's going on in the rate environment. We don't anticipate rates to just shoot down anytime soon. We've seen some good momentum in inflation, which we always talk about. Inflation's been the biggest driver of mortgage rates.
Right.
That's dropped. CPI headlines dropped from 4% down, all the way down to 3%. So a 1% drop this month, actually from June, that was recorded this month. So we're seeing a lot of movement in inflation, but not necessarily a huge jump downwards in rate momentum. So I think the conversations that we're having are a lot easier with clients. They understand the rate market. There's a lot of things that can help with that. So if you want to just talk about seller concessions a little bit and what you're seeing out there.
Yeah, there's a couple of interesting things that are happening real world in the buying environment. One thing, we're seeing a lot of contingency offers. So buyers purchasing a home contingent upon the successful sale of their own home.
Which we weren't seeing during
We weren't seeing
COVID.
That. No, not at all. We haven't seen that the last few years. So a lot of those are happening. I recently sold a home. I represented the buyer. We bought the home contingent upon their home selling. The buyer of their home also had a contingency. It's moving along great. Everyone's home has been sold, and we're moving forward. So that's not an uncommon thing to see on a contract right now, right? The other thing, talking about concessions, we're actually 42% of all sales had seller concessions, which means that the seller's giving the buyer money in the escrow to use towards a rate buy down, closing cost participation, something like that. So 42% of all sales. How that's used on the deal is up to the buyer, right? So, but a lot of buyers are taking advantage of a 2-1 buy down, buying down that rate, and that's been very effective to get a buyer into a home. Again, 42% of all sales, and that's all sales. So that's including cash offers, right? So, so we're seeing a lot of seller concessions out there helping the buyers.
Yeah, and we're utilizing these concessions in a bunch of different ways. Obviously, you talked about the temporary buy down. A lot of these concessions that we're seeing are on homes that are listed a little bit high. Because I mean, if you're looking at overall, 98%, I think was the end price from what the list price was.
Yeah, list price, sales price to list price is 98%.
Yeah, right? So almost all full price offers that we're seeing in the current market, but we're still seeing those seller concessions to help, and we're using them in a way to help alleviate some of that rate pressure that we're still seeing.
And a great example is a project you and I just worked on, where I have a listing. It's $850,000 in the Phoenix market. That's a bit. It's in a price range that's sort of the move up buyer range. A 10% down would still keep that buyer into a jumbo rate loan structure. So what we did is we presented to my seller, okay, if you participate and do you have seller concessions, we could bring the buyer down below the jumbo rate start rate, and that really helped out. Also presenting that example to a seller, showing them what that looks like versus what the same amount of money, which I think it was around $17,000 as a price reduction. So you look at the effect on the buyer's payment, it was $1,000 difference between just doing a price reduction and actually doing a rate buy down.
Yeah. So I think in summary, we're seeing great appreciation. I mean,
Yes.
just massive appreciation gains. If we see this through the end of the year, we'll be somewhere around 13 to 16%,
Right.
which is just huge. And I think buyers on the fence need to understand that this market is not depreciating. And we did see that all the way through December of last year. And since then, we've started to see these little appreciation gains month over month. So being able to capitalize right now on being able to still get seller concessions in this market, although inventory is low and rates are high, I think it's a good opportunity from a buyer's perspective.
Absolutely. Just some interesting notes. Overall, prices in the market are stable. They're rising, not as fast as they were, a couple of years ago, but their prices are absolutely rising. FHA contracts are getting more popular. We're seeing a lot of FHA contracts, and one of the outliers of this whole market is our luxury market. Stronger than seasonally, we usually retract in the summer. It's been extremely busy this summer in the luxury space.
Yeah, the luxury's been moving for
it hasn't really
through
slowed
all
down.
of this because
Absolutely.
it's not as rate sensitive.
How about in the overall, we talked a little bit about the economy just a few minutes ago, but anything else that's coming up that we should be focused on?
So the Fed's meeting 26th, I think it's 25th or 26th. The indication there is that they are going to raise another quarter. All indications are pointing to 2 more raises of a quarter this year and then a pause. We don't predict them to lower rates anytime soon. If I had to guess, I would say sometime mid to end of next year. The reason for that is that the jobs numbers that are coming in are super strong. So although a lot of it is not necessarily pointing in a good direction from an economy standpoint, the jobs numbers on paper look solid. So that's what the Fed's pointing to and why they can continue to raise these rates through the end of the year. So if you have any questions for us on any of this stuff, obviously Craig and I are around. Just shoot us a DM, give us a call, and we'll be happy to help.
Absolutely. Have a great day.
Thanks.